I think that those ideas, the digital assets framework, the idea of proportionality, legitimacy, taxonomy, that was not going anywhere in a split Congress, in a blue-red Congress, and that caused me to be fairly pessimistic at the beginning of the year. I would have thought Bitcoin's going to grind up to 20 to 40% a year. And then everything else is just fighting a headwind, and we don't know, but it's just going to be a continual simmering, struggle. Brutal, painful struggle. But then I think things shifted in the second quarter, and then in the third quarter, and then things shifted more, and then November 5th, everything flipped to the triple red timeline, and now I think the outlook that's most reasonable is Bitcoin surges up, and then all the other digital assets, they have a new lease on life.
MicroStrategy founder and executive chairman Michael Saylor is a big Bitcoin bull and proud maximalist. Not only has Saylor been one of the most vocal advocates for Bitcoin as the ultimate store of value and digital monetary network, but he has also frequently shared beliefs that Bitcoin is superior to all other cryptocurrencies due to its security, decentralization, scarcity, and adherence to a predictable monetary policy. Early this year, while speaking at the MicroStrategy World 2024 conference, Saylor suggested that Bitcoin will be the only cryptocurrency to ever be wrapped by a spot ETF and predicted that all other cryptocurrencies would be declared securities by the Securities and Exchange Commission. Ethereum is deemed to be a crypto asset security, not a commodity, Saylor began during a particularly enthusiastic speech. After that, you're going to see that Ethereum, BNB, Solana, Ripple, Cardano, everything down the stack is just crypto asset securities unregistered. None of them will ever be wrapped by a spot ETF. None of them will be accepted by Wall Street. None of them will be accepted by mainstream institutional investors as crypto assets. However, Saylor softened his approach after several spot Ethereum ETFs were approved in May, proving that US regulators did indeed consider Ethereum a commodity like Bitcoin. In an interview after the approval, Saylor said he had changed his views on Ethereum ETFs and similar cryptocurrency products, and suggested that they are not inherently negative for the market. He added that the approval of Ethereum ETFs benefits Bitcoin as it broadens the entire asset class and paves the way for increased capital inflows into Bitcoin. In a more recent discussion with the hosts of Altcoin Daily, the MicroStrategy executive chairman expresses a more bullish outlook for Ethereum and other digital assets, positing that the entire digital asset space has been given a new lease on life as a result of the outcome of the November presidential election. While Saylor remains super bullish on Bitcoin, he is now less bearish on other digital assets and opines that the entire space is about to undergo a complete renaissance. As we bring you clips from Saylor's video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for your support, and enjoy the video.
I think the political landscape and consensus really shifted in the second quarter when Trump embraced crypto. The crypto community, I think, was at the end of their rope, where it was pretty clear the current administration was going to continue to wage a war on crypto via enforcement actions. And they had nothing to lose by abandoning, the Democratic Party. And they made that decision. And then I think there was a, atmosphere of lawfare that caused, Trump to decide he would be benefited to ally with the crypto community. And so that alliance formed and got progressively stronger. And I think that changed the political landscape, not just in the US, but it changed it in the world, actually. It changed the course of human history. I think it changed the outcome of the election, right? I think the crypto community support actually was a material force that tipped the election, in favor of the red sweep. And I think we got a red sweep in part because of the support of the digital assets community. So I think that there were really two possible futures, two timelines in March or February of the year. And one timeline, the blue timeline, is Bitcoin motors up as the one the one crypto asset that's embraced as a commodity by the global community, and then everything else sits, in a gray zone, right? And in a world of uncertainty. And I think the second timeline, the red timeline, is the war on crypto ends. We get a supportive administration, House and Senate. We get a digital assets framework. We get a framework. There's three things we need in a framework. We need a taxonomy. We need legitimacy, and we need proportionality. And a taxonomy means give me a physical, ethical definition of a digital commodity, a digital security, a digital token, a digital currency, an NFT, and a digital asset-backed token, an ABT. We need those things defined. And the second thing we need, legitimacy. We need the rights and responsibilities of an issuer, an exchange, and a holder, an owner, right? If you're a digital exchange, what can you trade? What are your responsibilities, right? Obviously, something grounded in the do not lie, cheat, and steal area. It goes beyond it. Like, do you have a right to self-custody of your digital securities? Can you custody Apple stock on your iPhone? Can you custody your Apple stock on your Android phone if it's tokenized, right? Can you take your Apple stock out of the country? How do I issue a digital commodity? How do I issue a token? What's the difference between a security and a token? Maybe a token is utility in cyberspace, and a security gives you a right to cash flows in physical space, or it gives you a right to physical property, right? Define a digital currency, a token pegged one for one to a fiat currency backed by currency equivalents. Okay, great. Right, so you can see the taxonomy, you can see the legitimacy, and then you get to this issue of proportionality. It costs right now $10 million a year in compliance fees to actually issue a public security. If you want to raise $1 million once, how do you afford to pay $10 million a year for the insurance policy? How do I raise $100,000 when it costs me $40 million to go public, right? So logic says it shouldn't cost more than 10 basis points a year to issue a security or a token or something. If I have $1 million thing, then certainly when it costs me 1% of the thing, when it costs me $10,000 a year, that's getting expensive to issue it. But it may be $1,000, I could maybe handle a $1 million thing. I think that those ideas, the digital assets framework, the idea of proportionality, legitimacy, taxonomy, that was not going anywhere in a split Congress, in a blue-red Congress, and that caused me to be fairly pessimistic at the beginning of the year. I would have thought Bitcoin's going to grind up to 20 to 40% a year. And then everything else is just fighting a headwind, and we don't know, but it's just going to be a continual simmering, struggle. Brutal, painful struggle. But then I think things shifted in the second quarter, and then in the third quarter, and then things shifted more. And then November 5th, everything flipped to the triple red timeline. And now I think the outlook that's most reasonable is Bitcoin surges up. I mean, we saw it went from 68,000 through 100,000. Bitcoin's not growing 20 to 40% a year. It's growing like plus 20, 40 to 60% or more. Bitcoin surges. And then all the other digital assets, they have a new lease on life. At least there's an expectation of a regulatory framework coming.
Improved regulations in the cryptocurrency industry in the United States can bring about several significant changes, benefiting the industry while addressing concerns around security, transparency, and consumer protection. To begin with, clear regulatory frameworks can provide institutions with the confidence to engage with cryptocurrencies without fear of non-compliance. Regulations can legitimize cryptocurrencies as a credible financial instrument, encouraging developers to innovate in areas like decentralized finance, DeFi, and blockchain applications. In addition, experts like Saylor believe regulatory clarity will position the U.S. as a global leader in the cryptocurrency and blockchain space, attracting investment and talent from all over the world. Existing investors and developers will also prefer to operate in a clear regulatory environment, keeping innovation within U.S. borders. Saylor believes all of these will be achievable during the Donald Trump administration, giving room for the industry to grow and develop rapidly, with lots of benefits for individual investors. This is exactly why Saylor believes a crypto renaissance is coming in 2025. Here are more clips from the video.
I can't tell you exactly, what happens next because I haven't seen the framework, right? And that has to be determined in dialogue between the White House and the cabinet and the House and the Senate and the industry. But I'm optimistic, right? And now I would say, my forecast for Bitcoin isn't that different. It's going to grow 29% ARR over 21 years to be a $280 trillion asset class and 13 million a coin. That's not that different. Maybe a little bit faster up front. Maybe I'm leaning more toward the base case to the bull case than I was leaning from the base case toward the bear case. So yeah, I'm a bit more optimistic. But I think the big major sea change is you can see $500 trillion of conventional assets getting tokenized to become digital assets. I think the issue is, why wouldn't half of the equity in the world become digital equity? Like, why wouldn't you expect to see Apple stock, Google, Amazon stock trading on your iPhone and your Android phone as tokenized security? And I would think that the path is open for stablecoin, that to go from $150 billion to $1 trillion to $10 trillion. I mean, I at this point, you define a digital currency, you peg it to the dollar, to dollar equivalents. Yeah, there ought to be a regulatory environment where a company or a bank, especially in the US, can issue a US dollar-backed stablecoin. I think there's $10 trillion of demand for that. I think that we're going to go from $100 billion to a $10 trillion industry in stablecoins. We're just waiting for the framework for the digital currency. And as you know, I don't think of Bitcoin as digital currency. I think Bitcoin is digital capital. Currency is the short-term medium of exchange pegged to the fiat currency. Capital is the long-term store of value competing with real estate and gold and high quality equity and your art, that you're going to give to your grandchildren. I think those two are clear. I think the exciting thing, right, is defining a digital token, right? How about a token in cyberspace that has utility in cyberspace? It's not a security. It doesn't have a claim on real property or on cash flows, but rather it's Tom Brady gives a digital token and it gives super fans rights to chat with Tom Brady online, right? 10 million people want to comment on Tom Brady's post, but the top 100 super fans, they get elevated to the top. They get into the chat. They get into the 100-person Zoom meeting. They get something, whatever it might be, some prioritization. I don't know why there wouldn't be a million of those different types of tokens issued, right? I mean, the great travesty of the traditional world is 0.06% of the businesses in the US can tap the capital markets. It shouldn't cost 40 million up front and 10 million a year to go public. If you're Joe Rogan or Lex Friedman or Katy Perry or Tom Brady or a $27 million restaurant chain or $1 million a year chain of yoga salons or something, or an influencer or your podcast, why can't you guys all tap the capital markets? And if I tell you it's going to cost you 40 million up front, you're not doing it. But if I said, the upfront fees will be no more than 1%, 100 basis points, and then on a continuing basis is 10 basis points of the amount of money you raise or the amount of money that you have in the capital market, you might think, I can afford to have a 10% cost in order to comply with the laws. And there's 400 million businesses. There's only 4,000 publicly traded companies in the US. If you read Murray Rothbard in the history of money and banking in the United States, he gets to the point where he talks about the creation of the SEC 33 Act. And he says, yeah, it was a power grab by Washington, D.C. in conjunction with the Rockefeller interest to cut out the J.P. Morgan interest in order to create a cartel to limit access to the capital markets to just a set of very large companies that were wired in D.C. We think that's new. That's what he wrote 30 years ago before crypto even came into being. And that's what people thought in the early 30s. And so the point of this really is everybody's been beaten to submission to think that being a public company or raising capital in the public markets isn't for them. It's like, these are not the droids you're looking for. This is not for you, right? You've got the Stockholm syndrome. You're too small. You don't deserve it. You're just a musician. You're just an artist. You're just a podcaster. You're just a restaurant. You're just a single one city real estate developer. This is not for you. This is only mega corps with billions of dollars of assets can go public. Well, I think what the crypto community showed is you can spin up a token for $40 in 4 hours. And if you can do something a million times faster, a million times cheaper, a million times better, then don't you think if we want the civilization to move forward, we ought to establish an ethical framework? What I would say the government's role is to create an ethical framework. I mean, clear, legitimate rights and responsibilities and a taxonomy. Here's your 6 things you can do. If you want to sell a token backed by a bar of gold, well, then you damn well better keep a bar of gold for each token. You got to be audited, once a quarter by an auditor, and you got to publish the audit results to sell tokens backed by gold, right? I mean, something very straightforward. Tell people how to do it. Tell people what the ethical, definition of the thing is. I don't think the government should tell you technically how to do it. And I don't think they should dictate economically, should it be a bar of gold, or it should be a token of a gold coin, or it should be a token of a Spanish doubloon coin. I don't think the government should meddle in how you do it economically. I think, though, for this industry to thrive, the government's got to give you the minimal of rules and then get out of the way. And what happens next is, I think, millions and millions of digital assets will be created. I think that'll bring the exchanges to life. That'll create a renaissance in the wallets. That'll create a renaissance in all the applications. Don't get me wrong. I'm sure lots of people will do stupid things and they'll crash and burn. 99% of the companies that start fail, and 99% of the, whatever, public companies have a hard time competing against the Magnificent Seven. Just like 99% of businesses eventually get shut down. But you know what? What percentage of the people die over 100 years? Like 99%? It's like we shouldn't stop people from living just because over 100-year time frame, there's a high mortality rate for whatever. So I would say what's really interesting here is we jolted from a very regressive, a very depressing timeline to a very progressive, very inspirational, pro-technology, pro-prosperity timeline. And it all happened in 2024.
Saylor forecasts substantial long-term growth for Bitcoin, predicting it could reach $13 million per coin by 2045. He bases this projection on an expected annualized return of 29% over the next 21 years, driven by increased adoption and decreasing volatility. Under his leadership, MicroStrategy has aggressively invested in Bitcoin, transforming from a software firm to a major Bitcoin holder. The company plans to raise $42 billion over the next 3 years to purchase Bitcoin, aiming to securitize the cryptocurrency and leverage its anticipated appreciation. Here is a tweet from the billionaire announcing the firm's latest Bitcoin purchase and yield. MicroStrategy has acquired 5,262 Bitcoin for approximately $561 million at approximately $106,662 per Bitcoin, and has achieved a Bitcoin yield of 47.4% quarter to date and 73.7% year to date. As of December 22, 2024, we hold 444,262 Bitcoin acquired for approximately $27.7 billion at approximately $62,257 per Bitcoin. Saylor has urged tech giants like Microsoft and Amazon to consider adopting Bitcoin as a strategic reserve asset. He argues that such a move could significantly enhance their market value and provide a hedge against currency devaluation. Please share your thoughts on Saylor's predictions for Bitcoin and the overall digital asset space. If you liked this video and want more content like this, please give this video a thumbs up, subscribe to the channel, and turn on post notifications for more videos. These actions help with the YouTube algorithm and immensely support our growth. Thanks for watching.